Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We're going to get into a little bit of market discussion and talk a little bit about what's going on the livestock side of things. But to start things off, let's recap what happened on the market this week. And there's not a whole lot of action really going on this week.
It has been a little slower week, which sometimes that's not such bad news, especially when we've been in a few weeks of down markets. So perhaps no news or not much movement is a good week for us. If you look at cattle markets to start with, cash-fed cattle, pretty limited tests this week so far, but I'll call them about $1 higher as a result of the few sales we've seen. On the feeder cattle side, I would basically say we were steady for the week with not a lot of change on feeder cattle prices. If we look at the futures side, we actually got a little strength in futures. December live cattle, I would say, are up $2 for the week, while December feeder cattle up 2.25 for the week. So some early week price strength in those cattle futures markets. If we look at the choice beef cutout value, up $1.62 for the week. That puts that choice beef cutout value about 7% higher than a year ago. The choice select spread widened again this week. We ended up at $8.67. When you look at those individual components, ribs up pretty strong this week, about 12% higher than a year ago, I think, helping on that beef cutout value. On the pork side, we did see cash hog prices again higher for the week, up about $1.60, while lean hog futures were also up about $1.50 on lean hog futures. The pork cutout value was basically unchanged for the week, and even day to day, we didn't see a lot of movement in that pork cutout value this week, unlike what we've been seeing, where we have seen a lot of volatility. When you look at some of the components there, I'll say ham prices were stronger this week, up about $2. That puts ham prices 31% higher than they were a year ago, while on the belly side, belly prices have been staying below year ago levels, down about 16%. So a little recap of the markets for the week.
You kind of alluded to it after we've seen the volatility that we've seen in recent weeks and the decline. Is it a good sign, or is it okay that maybe the market's taking a little bit of a breath and is holding steady? And we've even seen some gains on I think about the pork side of things when we're still looking at massive runs of slaughter numbers.
Yeah, when you look at where we sit here for the remainder of the year, I just remind us, lots of supplies of meat out there. As we think about it, another big chicken production week, sitting second out of the weeks that we've had since 2005. Pork sitting there at fifth. It is probably good that we take a little bit of breath and don't talk about moving lower that would likely occur seasonally. And so maybe market's trying to get a sense of where to go from this point forward. Supplies, big, right? So we have big supplies of many of these products, yet we kind of continue to see demand that moves strong enough to clear those markets without a large backlog. In many ways, we have to be pretty happy with where we sit as we sit here in early October.
As we talk about these big runs of protein production and you look at the chicken side of things, you look at pork, and you add beef into that mix, how important is it that as we're seeing all of these discussions about modernizing trade agreements, that these markets aren't impacted in a negative manner for U.S. livestock production?
We absolutely do not need to lose a market right now here at the end of the year. And whether it's a trade restriction or a disease outbreak, whatever would shut down any type of trade, significant trade to other countries, it's going to be tough for us just given these large runs. So it is very important. And, yes, we're in the middle of talking about trying to renegotiate many of these agreements, and hopefully we end up with something better for us at the end of the day. But we certainly don't in the short run need anything that creates markets that go away. That's a big problem in these kinds of runs that we have today.
We're entering the next round of those NAFTA discussions. The Korea Free Trade Agreement has come up, and I think the USTR brought up the trade agreements in Latin America, and all of those are pretty big consumers of U.S. livestock, specifically beef and pork products.
You certainly named two of our big three when you think about South Korea and Mexico in particular, and you lose one of your big three markets in these kinds of large production runs, you know what's going to happen to prices, unfortunately.
Not only international demand that remains important, domestic demand and consumers here in the U.S. Are vital to what's going on and what's going on price-wise to these markets. As we look at unemployment numbers came out this week, and the latest jobs report also came out, which showed some contraction for the first time in a pretty long time.
That's right. If you looked at the report we got out this morning, we're down 33,000 jobs in September, according to the BLS data that we got this morning. Not what we expected pre-report. I think most of the expectations would have said up about 90,000 jobs. However, you have to remember 2 large hurricanes, I think, had a big effect on the numbers that we did pull out of September. So we'll wait and see whether that's the start of a trend. But that downturn in jobs, first time since 2010 that we've seen less jobs reported. However, at the same time, although we're talking about less jobs, the unemployment rate actually fell to 4.2%. I think that's the lowest level since 2001. Many would start to say we're getting it at or near full employment in this country. And it wasn't that long ago that many of us wondered how we would ever get unemployment rates back down to these kinds of levels. So it has been a stronger economy when we look at those unemployment numbers and look at the job growth we've seen. But we'll wait and see for that next jobs report. I know a lot of the downturn came from the restaurant side of things. And we know that's likely due to a number of those facilities being closed in hurricane-stricken areas.
But you have to think an unemployment rate of just over 4% has got to be good for consumption and the retail side of things and that part of the livestock side of things as well.
Absolutely. So I think a lot of times we remind ourselves how important those international markets are for beef and pork. But when you look at what's been happening in this country this year, the domestic demand is as important as we've been seeing the export side, and having strong economic growth and more jobs. I think that has helped overall meat demand in this country in 2017.
Let's get into another report that we talk about quite frequently is the Restaurant Performance Index that came out this week. While it's still showing positive in a very, very small way, it still is positive overall.
That's right. So when you look at the August data on that Restaurant Performance Index, they reported it at 100.2 for August, which is a modest expansion, if you will. That rate of expansion has been slowing as we've gone through 2017. If you remember back in June, it was setting at 101. So it has been weakening as we've gone through 2017. You look at the 2 components of that Restaurant Performance Index, and first we can focus on the current situation index. It's basically setting flat right at 100.0. Same store sales down slightly, customer traffic down slightly as well. Those signals tell me that we've had a little bit of slowdown in that current situation index, especially relative to where we were back in June when it hit 100.8. On the expectations side, same thing's been happening. Expectations have been slowly being reduced, but the expectation set at 100.5 in the August report. Many still expecting more same-store sales as we go forward. And so some maybe still slightly positive news. I don't see anything in that Restaurant Performance Index that makes me really worried. It's just that we had some really good months as we started 2017.
Scott, as we take a look at some of this trade data that came out this month, another really big month for beef exports here in the U.S.
Yeah, so when you look at that August data that we got out this week, 3rd largest month ever for beef trade, only trailing July of 2013 and July of 2011 in terms of that growth. We set at 263.8 million pounds of beef that was shipped out of the United States in August. It has been very strong. When you look at some of the countries, we already talked about some of these. Japan, another one of the big 3 when you think about beef. Our highest month of beef exports since October of 2003 went to Japan in August. At October 2003 was pre-BSE, so it's nice to see us back on the other side of some higher levels relative to where we set before that BSE outbreak. 85 million pounds of beef went to Japan in August. That represents a little over 30% of what we exported in total out of the United States in August. So beef definitely was higher and a bright spot in that report.
Scott, does that take into account the provision that we triggered earlier this year?
Yeah, so I don't think we're really going to have seen much effect yet in that beef trade data to Japan because we really didn't see those triggers happen until we got into August. So I think when we see the September numbers, I won't be surprised for us to see those numbers being moderated a little bit as a result of that tariff going from 38.5% to 50% on frozen beef products. So we'll wait and see what we get out of the September report, but don't be surprised for us not to be at the same kind of growth we've been seeing recently on the beef side.
What about the pork side of things? Are we still seeing big exports on the pork side?
So we are seeing big pork exports. If you look at the August data, 418 million pounds of pork that went out in August. It was higher than last month. I think when you look at it, though, relative to a year ago, we were just barely higher than we were in August of 2016. So still good news, I guess, when you look at the pork export side. However, we've gotten used to this very large rate of growth in U.S. pork exports that have been occurring for a number of months. And the fact that we're slowly starting to see that rate of growth temper a little bit, I hope we can continue to see some growth because we still have a lot of pork supplies coming for the remainder of this year and going into 2018. And so we need that pork trade to keep growing. So let's hope that the data we get here in August isn't the precursor of more slowdown as we look ahead.
And I would think as long as packer margins are staying where they are and the supply doesn't cut off, that we're not going to see a slowdown in slaughter on the pork side anytime soon.
We're going to put a lot of pork out there on the marketplace, and let's hope we can export a lot of it, trying to keep domestic pork and hog prices higher. That's true.
Scott, do we get a little nervous as we take a look at Iowa State University's farrow to finish returns for September? Because it looks like those have dropped off some.
Yeah, they have. So that September data out of Iowa State said we lost about $12.68 a hog for September. That's the first negative we've seen in several months. I remind us, you look back at 2017, we would have thought we would have experienced a lot more negative. Hog prices were higher than we thought in the mid part of 2017. So in many ways, maybe we're just coming back to where we thought we were going to be all along in 2017. We'll still be positive for the year when you look at those profitability numbers out of Iowa State. However, I think when you look at where we're at for September, I think you don't have to have a big crystal ball to say October, November, and December are going to be 3 more months of where we're likely going to be in the red ink on the hog side. We'll wait and see. I have a hunch a lot of folks probably pre-sold some hogs where there was a chance to perhaps be in the black. So although cash hog prices would show us being in the negative as we go through the remainder of this year, I have a hunch there was a lot of protection because folks did see some of that downside risk coming on hog markets.
Scott, anything else this week?
I think we've covered the major issues, Megan.
As we look ahead to next week, some reports will be coming out. WASD, and what else are we looking for?
Yeah, so we'll also next week get consumer confidence next Friday and also retail price information out. So we'll see whether that bacon price that you love so much has come down at the retail level yet. WASD will be really important as we get our first look at what USDA thinks happens to beef and pork markets after both hogs and pigs and cattle on feed reports of the last couple of weeks.
I don't think that bacon price has gone down any. Looking at my grocery bill, at least.
That's right. I won't expect much decline.
Scott, good to see you. We will talk to you next Friday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to our website, brownfieldagnews.com. Click subscribe. You can also submit some questions and comments if you have them as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.